You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Daniel O'Brien. Daniel, thanks for joining us today.
Thank you very much, Shelby.
Daniel, what are we seeing for futures?
Well, we're seeing the futures markets coming out of dependence on the September contract for corn, for soybeans, and for wheat, and now rolling over to new lead contracts. And you could see that in the contract volume and open interest numbers. So we're fully focused now on Dees corn, Dees hard red winter wheat in Kansas anyway, and November soybeans as opposed to those the September contracts we were looking at. And with that, we've had uh, some movement in cash prices. It's interesting to see the trends in those futures contracts in the last several weeks. For instance, for corn, we had gotten down to a low of about 392, 393. Latter part pardon me, early August, and now have had traded up to as high at just about 423 or so. This is on the Dees corn contract. Down again to about 413 or so, 414, and closed yesterday just under $4.20. So it looks a lot like the patterns we've seen in the past, where when the market uh, becomes convinced or stops worrying about the size of crops, then we come out of that as we shift focus towards actual harvest and usage and all of that. But we'll come back and talk about some of the information coming to the market in coming days, and that would be, of course, a week from today, the USDA September 12th crop production and WASDE reports. So you have that trend in the corn contract. And oh, by the way, we've been trading the relative strength indices has been had traded above 50, and on a 0 to 100 scale, if it's at 50, it's just neutral, moving sideways. So it's been a little bit positive of late. Not as high as say 70, 75 to indicate strong uptrend, but still at least holding sideways during a time when we're anticipating pretty large crops. So that's kind of a victory if you're cheering for higher prices, although we're not necessarily, but that's just the case. And then for soybeans, kind of a little bit of the opposite situation. We'd seen soybean prices having fallen again in that late July, early August timeframe to about 982, 983. And again, this would be for the November harvest contract. Had jumped up in the 2 weeks after that, heading into the first part to mid-August to about $10.65, 62 cents, something like that. Had dropped to about 1021 and closed yesterday at 1033. So some volatility up and down. But 2 weeks ago, we'd have marveled at the tremendous upward move that happened in soybeans, and now we're looking at the situation. Well, we've had that move, and we're giving some of that back, and so we'll see where all that goes. And then for wheat, we've just continued to trend downward. The fact that some of the strength we'd seen of late in some of these contracts has been really and fairly so attributed to traders getting out of or traders who had been in sell positions. This would be the speculative traders, what we call as managed money traders, who had been in long-term sell positions, had to, as that September contract, and they were in the September contract, they had to exit that contract, so they had to buy back. So some of the upward that happened in the latter part of August, heading into the last several days, has had to do with people having to buy their way back out of the September contracts. But even with that type of pressure for wheat, we've still seen a long-term downtrend. Closed on Friday, had gotten as low as almost $5, closed at 506 and a quarter, and really you can draw pretty much not too tortured of a trend downward over the last since June 10th, June 11th, all the way down on wheat. So challenging. I would say that even with those type of trends now in the futures, that we've seen some interesting things in the cash market. So you're in a situation now where in baseball terminology, uh, instead of having home runs where we gain a dollar or whatever over 2 or 3 days, we're noticing now gains of 10, 15, 20 cents. We're hitting singles right now in the cash markets. Interesting to watch some trends that have been happening across these different locations. Uh, we've actually seen some strengthening of the best cash prices in some of these regions here of late, and you've got the highest cash price, $4.15. This was on yesterday's close in the Garden City area, a negative basis. And that in itself is a little bit of a story. We've actually gone negative for the top bid in the Garden City region, and that's our bellwether lead area, 5 under, and at $4.15. But then we have Salina and Hutchinson having the top bids in their regions at $4 a bushel, and that's stronger for both of those than we had been seeing. One place where we had been having tremendous leadership, the cash market of late, was in the state, was in southeast Kansas, around the Pittsburgh region, and now that bid has fallen more in line with what we call historic traditional patterns, with a 390 per bushel bid for as the top bid in the Pittsburgh area. So when you see a situation like that, where for several weeks in a row you have a very, very strong bid, and then you see things weaken relative to other areas, it could be that they now have, or they're just really close to some early harvest down in that area. You've got pressure on the cash market. One or two bidders really starting to have a demand pull impact on the market. So you got that going on. I would say also, when you look at sorghum, one bid has stood out to me again. In that south central Kansas region around Hutchinson, you've got one bid at about $3.60, and then a whole bunch of others about 30, 40 cents lower. And and to me, that's a pattern that at least I think we've seen in that part of the area, where one or two major terminals are looking to fill a train or something, or to fill their bins, fill a train, do whatever in the short run, and then once their short run needs are met, then they recede back into the pack. So we've got a little bit of that occurring now in Hutchinson, but again, that happens over the years for a lot of these commodities, especially sorghum. When someone really needs sorghum, they bid up, they pull that in, offering 20, 30, 40 cents over the competition. Then when their needs are done, then they fall back until the next train comes in or whatever. So that's interesting to watch. I would say then for soybeans, top soybean bid in the state still remains southeast Kansas. And again, you can look at where we've had some new soybean crush capacity going in that part of the country. So you've got 993 as a bid in the Pittsburgh area, 988 in Topeka, and Topeka as a bid not that far from Ellsworth, where we have a soybean crush facility there too. So soybean crush is tending to lead the way in the soy markets. 972 in Salina, Hutchinson also. So that's what you see there. And then for wheat, even though we're post-harvest, we're up and down in terms of cash wheat prices. The highest bid that I've seen anyway, saw in looking at cash markets yesterday on the closes, was a 456 in the Topeka area, and a 451 following that in Salina, 446 Hutchinson, and then other bids markedly lower than that in other parts of the state. You do see some interesting new crop bids. So you kind of find out who in which of these regions is really trying to encourage people as we're going into seeding in September, October, who's giving cash forward contract bids that might be an incentive for Kansas farmers to plant hard red winter wheat. And you see that the highest bids actually in Topeka at 503. Admittedly, to the east, most of the wheats in south central and the west part of the the central western part of the states. But you do have a pretty good bid in Hutchinson. At Topeka 503, Hutchinson 493 as a top bid, at 483 in Garden City, and 478. Pittsburgh, Salina, 474. So interesting to watch all that. and Shelby, you and I have been watching also the relative wheat and corn cash bids in Garden City area. Well, because if we're gonna feed any of these any wheat to cattle, it's going to be there for the most part because that's where the lion's share of our cattle are for feeding, and that the ratio of cash wheat to cash corn prices in that Garden City area is now par. It's 1 to 1. So that's you're getting into the mode where it's a lot more profitable to at least consider feeding hard red winter wheat in cattle rations, and when you have a situation like that. But I would say all across the state, you've seen that type of situation. So wheat prices sideways to weaker, corn having gained some in the last bit of time. So you do see a similar type of a ratio actually down southeast Kansas, Pittsburgh. I don't know that we feed a lot of cattle in southeast Kansas, but the ratio of wheat to corn prices down there would, if we did, and maybe a few will, that you're on a break even situation there with that.
And Daniel, you mentioned harvest, and are there any concerns you have a little bit when it comes to the Mississippi River and moving some of maybe what we're harvesting?
Yes, signals out of the from the Mississippi River system that we have draft and tow sizes being restricted for barges going down the lower Mississippi, and of course, right now is the time when as we have a lot of grain coming into Kansas elevators, we'd be looking to be able to move that either by rail or through the Port of Catoosa anyway by barge to on down the system. So anything that slows up transit or limits the quantity that we can move is working against us in terms of cash prices and cash transportation number costs and all of that. So anyway, that's a concern. It seems in a lot of these months, you head into the fall, if you so I guess maybe one way to bring that together would be that for the most part, when things are dry during the fall, we it helps us on harvest. But when things are really dry in the Mississippi river system at the same time, then that hurts us in terms of being able to move that same grain down the river. So it's kind of a six of one, half a dozen of the other transition.
Daniel, I appreciate you taking the time to join us today.
Thank you so much, Shelby. I appreciate it.
That was K-State grain economist Daniel O'Brien. We're cutting to a short break now on Agriculture Today, but we'll be right back.